Hello, today we are going to talk about insurance. In general, we get a lot of calls from uh, any bank managers, any agents, and even we also check in many websites and see that so many insurance products are available and sometimes it looks attractive. Sometimes we get a lot of pressure from people who are trying to sell the insurance, and we as an investor sometimes we fall into these too much of pressure and we buy the insurance, and sometimes when we link back with the requirement we see that could I invest this money elsewhere and I could have earned much better return. Or sometimes your money gets stuck, and when you really need some money to withdraw, you are not in a position to withdraw that. So the reason mainly is that we get confused with too much of information about insurance and we don't know which one to take. But in a very layman's language, insurance, I try to keep it in 5 ways, and these are the types of insurance which is needed, and which this is more of a personal information, personal understanding, and there are a lot of other insurance. I'm not really getting into the textbook definition of all those insurance. I'm just trying to make you understand that from an investor point of view, these are the types available, and if those requirements are there for you, then try and explore those insurance. And before you're sitting with any discussion or searching for any information about insurance, try to understand these are the information you need to understand, and this type of insurance if suit, you go ahead and pick that kind of insurance, and try understand that the nature of those particular policies. So the first one, which is very important for all of us to have, is that medical insurance. Medical insurance is a basic need. It is mostly people who are working in an organization, you will have medical insurance, but still you need to have a separate insurance, because you never know that when you will leave the job, or you may be shifting the job, and maybe 1 week time you are taking the break, that time you have any accident or any diseases, then you won't get the insurance. So if you have a separate insurance in your name, you can avail that. So what is medical insurance? Medical insurance is nothing but if any hospitalization happen for you or your family members, if you are taking insurance in the name of family, that expense will be taken care by the insurance company. So you can fix that, what is the sum assured you want. So based on that, you will get the money. So for example, if you have taken the policy for 5 lakh rupees in a given year for the entire family, you can avail a hospitalization expense up to 5 lakh rupees, that's all. And you need to make sure that you declare if you have any health issue, if you had any previous any treatment, declare everything and take the policy. If you have a smoking, if you have any alcohol consumption, everything report and take it. So in case if any disease happen due to these reasons, we won't have any rejection. But if you haven't declared this information, you may get that you may get decline from the insurance company. So don't get into that. And why it is important? You must have acquired some wealth, or you may not have wealth. So if you have acquired wealth, if any hospitalization expense is there, suddenly you have to take money from your wealth and pay it off. Why you want to take that risk? Or if you do not have wealth accumulated or savings accumulated, then you have to end up taking the loan and treat those medical expenses. So it is very important from a personal finance point of view. So medical or health insurance is a first important insurance needed. Next comes the life insurance. In life insurance, the first one is that term insurance is important. Term insurance means this is again insurance is taken for 1 year, and within that 1 year time, if nothing happens and you are not paying further, your policy is not valid anymore. So you have to keep buying the policy every year, keep paying the premium every year. And there are facilities, you can pay only for 10 year, 5 year, so that means the premium amount will go up. So for example, if you are a breadwinner in the family and you have a child who is small, she need education, she need her own time to get settled, or you have a loan, or your spouse is not ready to work, or not in a position to work. So which means whether you are alive or not, your family need that money. In case if any death happens, emotional loss you can't protect, but any financial need you can meet with this particular insurance. So whatever sum assured you have taken, that money will come to your nominee. So which means your family will get protected with that. So if any loan repayment is there, consider that and take a policy according to that. So once the family get that money, they can settle that loan, so that liability will not fall into their head. So it is very important to take it. So next one, so this is death is covered. So consider that how much money is needed. For example, today if anything happens, how many years more they need your money to survive. So consider that and take the policy. So if you are trying to understand yourself, if you know how to do it. Otherwise, take the help of an advisor and calculate how much money you need. Based on that, take the term insurance. At the same time, very important insurance to have is a critical illness policy. Critical illness insurance is another one. If IRD has declared that there are about 34 type of diseases, if that happens, we will get a lump sum money. If the policy holder will get a lump sum money. So that way they can, there is a possibility that if that kind of disease happens, you may have to take leave from your job for a period or permanently. So during that period time, your medical insurance available only for hospitalization expenses, and term insurance will enable only if death happens. In this case, if any critical illness happens, death is not happening and hospitalization may not happen after a certain period of time. So that time you need a sum of money to protect yourself. That time critical illness policy will come handy. So these policies are the very basic requirement for anyone to avail. These are, treat that as an expense. Don't think that you want to get that money back. In term insurance, you have an option that the one disadvantage is that usually term insurance you have to pay till the time your policy is matured. In case if no death, your whole money is gone. You won't get that money back. But there are policies you will get the money back. So for that you have to end up paying more premium. If you are a person you think that you can't lose the money, you can take the term insurance with money back option available. So it's up to you. So these are the three policies, very basic. And there are two more policies I just want to introduce to you. There is something called unit linked policy. This is one portion of the money is invested in stock market or debt instruments. So after a certain time you will get that money returned to you. We have a lot of experience that initially the expense was too much, so the invested money was very less. So the return from this policies were very minimal. But now the regulators has come up with some restrictions in terms of giving the expense ratio. So this is actually can compare with mutual fund, but even now mutual fund ratio is much lower compared to this one. But the advantage here is that, especially if you are looking for a tax benefit point of view, mutual fund we have to pay the tax if the profit is more than 1 year in a given year, 10% we have to pay. But in unit linked policies, if your investment is lesser than 2.5 lakh in a financial year, you will get full tax exempted. So this is something, if you can sit with a planner or you can understand the calculation and see that if it's beneficial for you, comparing your financial goals and your nature and everything, you can, or your current financial state, you can go for this policy also. Another one, there are traditional policies available. There are policies which good for getting the income point of view. There are policies which is available to acquire monthly or annually annuity schemes compared with the pension. So there are policies available. to get regular income also. Traditional policies available. So compared to the kind of return you get, it may be lower compared to investing in stocks and mutual funds, but from a security point of view, it is good, because at the time of you are buying the policy, the companies are guaranteeing that this much of, or securing that this much of income you will get for a certain period of time. So people who are looking for a regular income, this is one policy you can think. So these are the 5 different policies you need to understand. In case if you are a person, you do not know what are the different type of insurance, you don't have much of knowledge about insurance. So understand this before having a discussion about insurance with anyone else, or you are thinking to buy. In case if you have any questions related to the topics which I have covered, you can always email to us or call. When you call please during the work hours. We will come up with the next topic in the next episode. Till then, see you. Thank you.